Hi there, I'm Dean Heskin. You're tuned into our podcast, The Secret War on Cash, brought to you by Swiss American Trading Corporation. I have with me my co-host, Chris Agelastos. Chris, how are you today?
I'm doing well, thank you.
Very good. Nice to see you. Let's get right after it. We got a lot going on in the world. We've got another billionaire who is, in this one, I hesitated to do this article, so I can't, there's no way I can say this name, who's weighing in on what's going on in the world of finance and the markets and the economy.
Yeah,
Billionaire Chamath, I think that is correct. And
yeah.
then it's Palihapitiya or something like that, I believe. Anyway,
Your guess
sounds
is
the
as good
alarm
as
on,
mine.
that was my guess. I had to do it publicly too. He sounds alarm on U.S. debt crisis, warns of a credit downgrade, dumping risk, and more.
Mhm.
And again, one of several billionaires who's been weighing in on what's happening. And in this instance, what he's referring to is how Congress is going. They're basically gave the green light to the bill, which is basically allowing the 2017 Trump tax cuts to become permanent.
Mhm.
And that's in a way, some people think that, okay, that's great, good news, got tax cuts, etc. Not good for the dollar, though. Certainly not good for the dollar. And this actually is something that will that one of the things that they're looking or thinking will take place here is we're going to see it, um, maybe have a good effect on some of the other markets as well. So, I mean, in your words, Chris, or from your perspective, with the Trump tax cuts and with what they're doing here, are you in agreement? I mean, do you think that this is going to, you know, create this this spiral that they're talking about here?
Yeah, well, I think part of the problem, and this guy Chamath, he was big in Facebook. He's a venture capitalist. He owns part of the Golden State Warriors now, and so he knows a few things about dollars and running business. And what he's really talking about here is that the politicians, Congress, they have to make deals with each other and essentially approve each other's projects in order to get these bills passed. They can't pass it without sort of making deals and cooperating with each other. And this guy used to be he was a long term Democrat, and he's recently switched over to the Republican side, being more supportive of Trump and some of his allies. But what he's saying here is that the system itself is still broken. You can have good people in office, and unfortunately, the way we're running things right now, we're still going to have a lot of waste and junk in these bills that get passed. And so his concern is that this spending is going to continue, and we're not really doing anything to rein it in. I mean, we heard a lot about Doge the last few months, the program that Elon Musk was a part of. And even Elon has come out recently here and said that really the only way we're going to completely, get out of this huge debt problem is to exponentially grow our GDP, which means we have to start producing something here in the United States again and generate more income. We can only cut so much, and we can't cut enough to really save ourselves. So it is kind of a dire situation. I mean, they're not saying in here exactly, are we 6 months or a year or 2 years away from catastrophe? But what they're saying is that if we don't make big changes soon, we are going to have more trouble on the horizon for us.
Well, it perfect lead into the next article here from the Daily Huddle. Uh, Morgan Stanley is warning that a big drop for the U.S. dollar is incoming as bank updates their market for it. They update
Mhm.
their market forecast, excuse me. And it's interesting though. This article, as you talk about that they expect to be, see some big drops in the dollar. They also are saying that's going to create what they're calling tailwinds for the S&P 500. So it'll actually be a good thing for the market, this drop in the dollar. And
Mhm.
explain a little bit, Chris, about what that means, because I know a lot of times it seems like we're dealing with a lot of the negative. Seems like there's a little bit of a positive there.
Well, inflation and the dollar. So as inflation gets higher, then all the numbers that we're talking about, the numbers we're spending at the store, gets higher as well. So part of the reason the stock market has gone, in the last 5 years, what's it gone from maybe 25,000 to 40,000? A lot of that growth is because of inflation. So we see people in the stock market looking at their portfolios and saying, "Great, I'm making money." So they generally feel positive about it. But the downside of that is that now it costs you more for everything that you go and buy. So the net effect is what you really have to look at. And so, yes, you want to make good money, but you also want costs and prices to stay low so that your money maintains its purchasing power. So what they're saying here is that, no, the dollar is going to, they're estimating another 10% drop this year. Which is pretty significant. You know, when I just got back from a trip to Greece, and they used the euro over there. And when I was planning this trip about 6 months ago, the dollar and the euro were nearly neck and neck. You know, $100 would get me 100 euros. And then when I went on the trip this last month, $100 only got me like 90 euros. And which is about a 10% drop in just the last several months. And now they're predicting that we're going to see another 10%. And they say, this is primarily predicated on the Federal Reserve cutting interest rates, which everybody expects them to do. Now, maybe if they don't cut them quite as much, maybe we'll only see a 7 or 8% drop in the dollar. But the bottom line is we are going to see a drop in the dollar, whether it's 6, 8, 10%. This trend that we're on is not changing. And so don't get too hung up on the number. The important thing is we're heading in the wrong direction, and we need to make some changes. And this is why people need to really make sure they're protecting their money, because if you put your money in the stock market right now and you make another 10%, but the value of your dollar drops 10%, you're really just staying even. This is why people need to consider tangibles like gold and silver, real estate, physical assets that can maintain their overall value in devaluation periods like we're in right now.
Well, why don't you explain to people how they can do that, Chris? How they can find out more about how they can do that, actually.
Yeah, well, certainly go to the website at www.swissamerica.com. You can request some of our reports. We'll email that stuff to you, or a lot of our clients like hard copy so that they can kind of flip through it, keep our materials as a reference. You can also call us at 1-800-289-2646 or text that number. Just let us know that you want to learn more, and any specific concerns you have, we can kind of tailor the info we send to you, and we'll get that off to you. But if you haven't looked into doing something a little less conventional, which, you know, we used to say that, and it was true. Nowadays, a lot of people are getting into gold and silver, so it is becoming more mainstream. But I think for the average person, maybe they've heard about it, but they don't really understand it. That's where our people here can help educate you on the different options and help walk you through the process if it makes sense for you.
Oh, fantastic. Well, thanks for all that, Chris. And for those of you tuning in, thanks for doing so. If you're not subscribed to our podcast, please do that as well. And follow us on social media, as we'd love to stay in contact with you and bring you information or news very similar like what we've done here today. So have a great rest of your week. Chris, thanks again, and we'll see you real soon.
Yeah. Thanks. Take care.